Glad to be here again with another valuable video on money, business, and investing. We just got done doing a live stream on Facebook. So if you have Facebook, join us on our business page on Facebook. Just look for the logo Master Investor and get additional knowledge on money, business, and investing. We're going to be speaking about how to use leverage and control to build wealth on this video. That's the theme of the day. Yesterday we talked about how to raise capital, how to use other people's money, why it's important to respecting rule number one of entrepreneurship, which is stay in business. And how do we do that? By raising capital, which it is the job number one of an entrepreneur, at least a wealthy entrepreneur. Once we master the ability to raise capital and understand how to do it, the art of doing it, then we can definitely reach great levels of ultimate wealth and have infinite return on investment coming into our lives without our own capital being invested in the deals, because we're using 100% other people's money, OPM, tax-free money. Because when we use the bank's money, when we use a credit card of our personal credit, everything that is considered debt is tax-free. Okay? Because money is created with debt. That's why the ultra wealthy, we love to use debt. We love to invest with debt because it allows us to create infinite return on investment, money for nothing, and basically we are obtaining everything for free. But we have to have financial education and have the financial knowledge, which is turning that information into real action in our lives, and applying that in every aspect of business. When we are acquiring an asset, when we are going to exchange that asset for a new asset, we have to apply the new rules of money and use debt, because the new rules of money and the new capitalism is based on using good debt to invest for passive income. And sometimes we also invest for capital gains income. Those are the two types of income that an investor can get when he or she invests for an asset, right? So either it's going to go up in value and they hope that they will sell it for a higher price, and then they obtain a capital gains income. It's taxed at a certain higher bracket. Passive income has no employment tax, self-employment tax, nor it has a subject to pay social security taxes. So right from there, we're minimizing by having an entity and investing for passive income. We minimize taxes, which is the number one expense that exists in the entire world for people. So if we can minimize taxes, then we are already wealthier than the average individual. But the only way to do that is by having financial intelligence, okay? So yesterday, you learned how we can actually raise capital. So today, we're going to talk about OPM. We're going to talk about return on investment. We're also going to cover what else? IRR, which is basically internal rate of return. And then we're going to cover leverage, control, exit strategy, and why market crashes are no indication that investing is risky. You have heard all the time around you probably that people say it's not a good time to invest because the market's crashing. Those people are speaking from a level of traders. They're traders, they're not investors, okay? Because actually when the market crashes, for a master investor, for someone that has financial education, we see opportunity and we can actually cash flow even more when the economy is crashing and everybody's panicking. The traders are panicking, so we actually take advantage of uneducated investors. That's why financial education is priority when it comes to building our wealth. We need to have a solid foundation in regards to financial education, because in return increases our financial IQ, and the more financial IQ we have, the higher our financial intelligence is, which means that we can use debt, other people's money, tax-free, to build passive income and obtain everything for free legally and reach infinite return on investment. So when we raise capital for a property, a real estate property or a business, then we are using the bank's money. We're maybe using our own credit card to put a down payment on that deal, or we are using other people's money, that other investors that we presented the opportunity to, and we're raising 100% of the deal tax-free. and then we still getting positive cash flow, maintaining control over that asset. That's why it's so important to understand leverage, the new rules of money, and that the old rules of money do not work anymore, because today money is created with debt. So we have to become used to getting into good debt. We actually work hard to build passive income with good debt. We focus on looking for ways that we can actually raise more money so that we can invest. So a business or an investment is supposed to be built to raise capital from the front end, from the end users, right? Our customers, and the back end, private lenders, angel investors, banks, etc. So our business, whatever business we want to launch, then you need to focus on understanding who's your market, what is the solution that you're providing, and how is that business going to raise capital from the very beginning. Because rule number one of entrepreneurship is to stay in business, okay? So let's run down through the ROI, the return on OPM, and then IRR, which is internal rate of return. Using the other people's money, the bank's money, because it's tax-free money, and we keep the appreciation. If we're talking about a real estate deal, cash flow income, we keep cash flow income, tax benefits, amortization, and other phantom income that we will talk about in a minute. The bank puts up 80% of the money, and we receive 100% of the benefits. What a great partner, right? Many people use the bank as a saving account. That's it. They go there, they put their check in there, and then they get, hit with inflation by the end of the year. So their return on savings is not even higher than the inflation rate per year. So they lose money by having money being parked. Well, it's not really parked, because investors like me will go there and raise the capital to put it to work. So for the saver, they just park in the money, and they're not making any money on that money, really. Before 1971, that was possible to make money with your money sitting in the bank. But if you have the financial education, you don't need to put the money somewhere that is not working for you. You actually will direct that money to create or build an asset to produce passive income for you, even while we're sleeping. Passive income comes to us even while we're working out, while we're playing around. It's the best type of income. It gives us freedom, okay? Return on investment is the positive cash flow from the investment after all expenses are paid. How is the return on investment measured? In capital gains or passive income, aka cash flow. As an investor who invests for both capital gains income and passive income, the only return we count is the passive income or cash flow of the business, because the other potential gains, such as capital gains, they are estimates and do not become a reality unless we sell the asset to get the benefit for the appreciation of it, or sometimes we can get the benefit from that appreciation by refinancing the deal, because we improve the status of the building. If we're talking about real estate, we improve the building through management. Therefore, we can refinance the deal, because the bank will recognize that is more valuable today due to the changes that we implemented, because the former investor mismanaged the deal probably. And we love that, because we take advantage of that. And then we make a deal with the bank, refinance our interest rate on the loan, so we get to keep more passive income, and then we borrow money against the new real estate appraisal of that deal, right? So it went up in value, so we can actually pull out money and use it as an ATM to acquire either a new asset or even improve it even more to improve the rents immediately. But every time we use debt, it's because it's going to give us an increase on our positive cash flow. That means it's good debt, because it's making us wealthy. It's quite simple at the end how to determine whether something is good debt or bad debt. The way the cash flow flows, if the good debt is making us wealthy after all expenses are paid, including the debt service and the interest rate, then we consider that good debt is making us wealthy. And then bad debt, on the other hand, takes money away from us. And as long as we have an asset that will pay for the bad debt, then that is okay to have bad debt, because maybe it's a car that we want to drive just for fun, and it's something that we always wanted to have. So we create an asset that will pay for the cost of that liability or that luxury that we truly want to experience. So it's free at the end because we use an OPM to create the asset, acquire the asset, and then that asset is paying for all the expenses, including the liability or luxury item that we want. Okay, that is going to cost a certain amount per month, but the asset will make 3 times more the amount of the payment that we need to make every single month to enjoy that item of luxury. So ultimately, a master investor, you will learn how to raise capital. You will learn how to build passive income. We're going to focus on building our asset column, okay? We're doing a 30-day challenge. We're going to be doing a live stream every day talking about money, business, investment, because our company, we're more than an investment management company. Our mission here at Master Investor is to elevate the financial well-being of humanity through high-quality financial education made simple. We're looking for opportunities to build passive income and true wealth. We're going to show you the path to financial freedom and demonstrate how you can actually duplicate the steps that is working for us. All the steps that are working to make us wealthier, you're going to be able to duplicate that and apply it in your life, and we're going to hold you in any time of the journey to help you succeed when it comes to building passive income through your asset column, because that's the only way, by controlling assets under your companies. And we're going to show you how to incorporate if you don't have a company. We're going to show you how to find your tax attorney, your business lawyer, the accountant, the right team members around you, how to do a business plan, how to do the marketing budget, how to begin using credit, whether it's personal credit. We're coming out with a new credit kit so that people can analyze their credit and figure out ways that they can improve it, to utilize that to acquire a new asset that will produce passive income and hopefully replace their entire income if they have a job. And so if you want to quit your job, or if you're in a situation where you don't want to be working for money the rest of your life, then make sure that you invest in your education. Go get our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. The link is in the description. We also have another ebook, The 10 New Rules of Money. We're releasing 2 more ebooks this month. Stay tuned regarding crypto, and because it's an asset class, crypto. So once we're getting excess of cash flow, we got to diversify among the different asset classes so that we hedge for inflation and protect for down economies, okay? Because some assets will do great in down economies, and we can actually leverage that. So we have one coming out on crypto, and also the levels of investors, and we're working on the next one, which is going to be 3 ebooks, but 2 are going to be released in the next month, and the other one in 2 months from now. And that one is going to be about raising capital and how we can do it successfully and fast. How we can tap into certain different lenders, and we can work a deal to acquire our first either real estate property, business, or a digital asset, right? Because there are many companies for sale online, and there are a lot of digital assets that you can obtain online for free. Actually, you can go to our website, go into the tab of investors, and find marketplaces that have different companies providing different products, and the opportunity to partner up with them to bring in sales, clients, new clients to them in exchange for a percentage of each sale. And a lot of them are memberships, so that's residual income. If the person pays the entire year, the membership, or maybe 5 years, that income comes to you every time they make a payment. Or if they upgrade to a new product, they'll always be linked to us, to our company, right? So we're basically sending new clients to that other company, and we're using their tools. They give us the marketing tools, everything that we need in order to bring in new clients, and of course keeping track of that flow of traffic that we're sending to them. Everything will be set on systems. So a business is a system of systems working hard to do the selling and telling for us. Okay, so let's continue here. So return on investment, right? So it's a positive cash flow. That's what we look for. We invest for passive income, right? So when we measure the return on investment, we measure based on passive income. That's what we count, because that's what's actually happening. Capital gains income is in the future. If the market is at that point where we can sell and get that capital gains and estimate, right? If we're talking about stocks, but if we're talking about real estate, if the market in real estate goes up and we can actually sell that property for that capital gain. But all of that is, based on projections. But we want to focus on passive income and measure the return on investment based on the passive income, because that's what we're actually going to get. And it will help us determine whether something is a good business or something that we need to walk away from, right? A lot of times as an investor, we need to learn how to walk away from deals and not get emotionally attached. And it comes down to also personal relationships, because our time is the most precious asset we have. And if we're not aligned with the people that are around us on a daily basis, we're not aligned in the visions and where we're going, then it's going to create obstacles to get where we want to be and reach wealth and everything that we desire to build here in our life, right? We have to be really unapologetically who we keep in our life and who we don't keep in our life. And a lot of times people are in toxic relationships. When you find a bad business, a bad relationship, you usually find a bad partner. There's in disalignment in values, in the core values of the individual. Find people that are in the same vibrational length, right? They're vibrating at a frequency. And then the core values have to be aligned too, okay? The wealthy mindset. We have to rub shoulders with wealthier people than we are. We have to speak the proper language about money. That's why we always tell everyone, words are the most powerful tools humans ever created. Because with words, with the proper words, we actually raise capital. And we're going to show you exactly how to do that here at Master Investor. We're so happy to be doing this every single day, providing the tools and the resources that we all need to build passive income. Okay, we're going to give you the answers, we're going to give you the tools, and you're going to take action. We're all going to take action at the same time, because it's about controlling our finances. That's what Master Investor is all about, right? Our mission is to increase the financial well-being of humanity. Through high-quality financial education, made simple, we look at opportunities to build passive income and true wealth. Okay, so we're going to give you the tools so that we make the decisions, you make the decisions of how you're going to create passive income, because you have the knowledge. So the money that you have saved up, it's your job as a master investor to put that to work, to raise more capital with it, to invest for passive income. And that return on investment is supposed to be measured based on cash flow. How much cash flow is it making right now if we're acquiring an existing asset, such as a real estate property, a business that somebody's selling? And we can raise capital, seller finance, right? We talked about it yesterday. It's 6 different ways that we can raise capital: family and friends, seller finance, private lenders, other investors, etc. We covered them all, but the art of raising capital is the holy grail. It's what we're supposed to be focused on. We have to always invest with the mindset of raising capital, of using OPM, using credit, borrowing money, good debt, because it's tax-free. And we invest in it for passive income, therefore passive income is also tax-free. But we have to have a strategy on taxes and how we're going to spend every single money that we touch, because it has to be directed according to the tax code so that we can minimize taxes on passive income. That's why we need an accountant with the right mindset, with the wealthy mindset. Not all accountants are great, so they have to speak the language of the wealthy. They have to understand the tax code and why the more passive income we create, the more wealth, the less taxes we'll make, because we're using debt. Okay, so listen to the words that they speak and the way they react when you tell them you're going to make millions of dollars this year. If they tell you, oh no, you're not, you're going to pay a lot in taxes, then run away from that accountant. You want a CPA that understands the rules of money, the new ones, and play by the tax code, utilizing every tax benefit that exists to minimize taxes legally, because the more passive income we make, that means that our businesses are doing great things for society, for the economy. Therefore, the government has put laws in places that will benefit the entrepreneurs and inside investors, okay? okay, because the other potentials, right? So we want both the increase in appreciation and the return on investment in our pocket every year, months, or daily. But cash flow is the only return that can be tangible measure while we hold the asset. More leverage, higher returns. Leverage is important. The higher the leverage, the higher the return. The more we borrow, the faster we get to infinite return on investment. Money for nothing. The increase in debt is covered by increase in cash flow. We borrow even to do renovations. All the expenses are paid by the bank, and we keep all cash flow. We focus on having 100% finance transactions. All the returns are infinite return on investment because all expenses were covered by the bank and all the passive income come to us. Any increase on passive income on top of the existing passive income is infinite return on investment measured by cash flow in our hand and not an estimate. Okay, that's why it's important to invest for passive income. In summary, the bank puts up 100% of the money for our deals, and we receive the increase in passive income. The tenants pay for all expenses and mortgage back to the bank and creates infinite return on investment for us, money for nothing. Internal rate of return, by understanding IRR, then ROI, return on investment, can be increased. Our IRR measures the other returns and other leverage that a well-controlled investment can provide to us. The first income that measures is passive income. Passive income, like we mentioned, is subject to lower taxes than earned income. Passive income is not subject to Social Security or self-employment taxes. These taxes do not show up on the expenses in the expense column, and therefore is a gain on income for us when we operate with an entity on the right side of the cash flow circle. Depreciation is the second example of IRR. In the US, the tax department gives the inside investor or the master investor an additional income that looks like an expense. That income is depreciation, or known as phantom income too, the income that shows up somewhere else. Let's say the tax bill is $1,000 and the IRS allows me to depreciate and deduct $200 for depreciation. That additional $200 is phantom income, or money I did not have to pay, or we do not have to pay to the government. It stays in our control, in our pocket, and we can direct it to raise more capital, invest it into an asset that will produce passive income. Maybe we go to a bank and raise capital with that money so that we can acquire a new asset. So ultimately, we kept the money that we were supposed to give to the bank legally, to the government, I mean, legally we kept it. The $200 is additional return on investment for us. But we need to understand how to see this income, phantom income, by investing in our financial education so that we invest for passive income and therefore be able to tap into phantom income when it comes to real estate investments. Any item that declines with age and usage will experience depreciation benefits. A tax accountant can help us take advantage of this. There's no depreciation for paper assets, right? That's what we say. We have to diversify among the 5 different asset classes that exist today. We have to learn how to build passive income on different asset classes, not just in the same asset class, and also capital gains income, right? Fourth, let me see. Oh, the third example for IRR, internal rate of return, is amortization, paying off the debt on scheduled basis. That's what amortization is, when we have a schedule on the need and the obligation to pay the borrowed money that we obtain through debt. When we have good debt, which is the debt that someone else pays for us, as it gets paid down, that becomes passive income, because every time we pay the mortgage or the bank, the lender back, right, with the tenant's money, with the cash flow that is generated throughout the business, we're using that money every month to pay it. As soon as we make that payment, we also make a payment to ourselves, to our company, because we keep whatever is left after everybody's paid, including the interest rate and everything, all the expenses. The positive cash flow that we get from that transaction, that becomes passive income to us. And it comes from the amortization payment. So amortization is an internal rate of return, right? So whatever is left of the debt service paid monthly. Amortization becomes income to us, passive income to us, makes us wealthy. That payment we made to the bank lender from the renters, end users, right, to pay the mortgage or the good debt of the assets, we keep the positive cash flow after all is paid. Additionally, we still receive all the tax benefits associated with the investment. Fourth example of IRR is appreciation. Is the increase in the asset value. This is not appreciation based on opinions. We measure by the actual increase in income on our income column that we get due to appreciation. So, for example, if we're talking about real estate property that we're holding for 5 years and we raise the entire deal, including the down payment through private investors that we introduce the deal to, then after 5 years, we improve, right? We improve during those 5 years, we improve the real estate through management. The bank recognizes that improvement and we are allowed to refinance the terms of the loan, lowering the interest rate, putting more passive income into our packets, and then we can refinance and borrow the money against the deal after we refinance with the bank with the new loan term, and we can actually take that money and pay the down payment of the investors so they can get an exit strategy after 5 years and they recoup the entire money back, and whoever continues, in this occasion will be us, we continue to control the asset and still receive passive income, then that is infinite return on investment. However, because on this deal we raise 100% of the entire investment, we begin to receive infinite return on investment from day one because we never use any of our capital. We use 80% of debt from the bank and we use the 20% from private investors. After 5 years, they recoup their down payment back, and then if in the agreement they are supposed to continue control the asset because they lend us the money, then they will also begin to get infinite return on investment. But we were the first ones because we raised the entire capital without using our own capital. That's why it's important to understand leverage and control. Okay, we're almost done with today's lesson on money, business, and investing. Stay with me. Okay, so the exit strategy. The use of leverage to become wealthier. Instead of selling the asset, we pull out the money by refinancing the good debt. The bank recognizes the increase in value by adding better maintenance, renovation, and other improvements in management. Then we borrow money tax-free against the asset due to the appreciation. The cash flow of any money that we borrow is to either improve the building and we can increase rents every single month. So immediately when we borrow money, we are also going to reflect that on our passive income. It's supposed to go up, otherwise it's bad debt. We have to make sure when we borrow the money and pay everybody back, whatever is left, we can also increase the rents. We have to put that money to work, unless it's just to pay the investors back, but we're supposed to reinvest or invest that capital, that borrowed money, to increase our passive income ultimately. The cash flow of the asset covers all expenses, including the debt service, covers all expenses through higher passive income. By borrowing rather than selling, we get our down payment back tax-free and get to keep the asset. The asset passive income is an infinite return on investment because we have no money invested in the deal and we still receive passive income using OPM, other people's money, the bank's money. That is the ultimate leverage to become ultra wealthy today, using good debt, mastering the art of raising capital and using the bank's money, using tax-free money. After 5 years, we can refinance the deal, okay, from holding and pull out money tax-free. The money goes to the investors who put up for the down payment to acquire the asset. We still maintain control over the asset and the increased mortgage is paid for with the increase in income of the asset. Infinite return on investment is free after successfully recovering the down payment back and keep control over the asset to receive additional cash flow. We look for another asset opportunity that will give us infinite return on investment and high return tax-free. This is an example of using control and leverage Getting wealthy according to the new rules of money of the new capitalism. Capitalism based on the use of debt to get wealthy. We work hard to find more ways to find more good debt, to invest into good debt, right? To acquire good debt, to get into good debt and use leverage. Rather than working hard to getting out of bad debt, like many do, as they still use the old rules of capitalism, right? Because the money is not attached to the gold anymore. So it's a currency. The US dollar is a currency. Today, money is created with debt. It's an idea backed up by confidence. So we have to learn how to use good debt, because that's how the government works. That's how the economy works, okay? It's a currency, and it must move from asset to asset to maintain its value. Money is losing, the dollar is losing value every single day. That's why the most important words are cash flow. Cash must continue to move from asset to asset in order to maintain its value. So when we touch cash, we're supposed to put it to work, put it into an asset that will create more passive income and recoup the entire initial invested back. And we repeat the formula. That's how we reach velocity of cash flow. And we have the 3 E's of a master investor: financial education, experience, and excess of cash flow, okay? And then we can help the world. We can give back like we're doing right now here at Master Investor, giving you the tools, the rules, the new rules, and resources to change our finances forever, to live truly the way we're supposed to by mastering the game of money, because it's something that we're going to have to play for the rest of our life. We have to utilize money to do anything, to buy groceries, to travel, right? We can't go far without money. We have to master money. We are the masters of money, not the other way around. We're not a slave to money. We are the masters of money, okay? Make sure that you use other people's money, use the bank's money, use your personal credit, and stay tuned for our daily live stream on money, business, and investing. Remember, today money is created with debt. That's why debt is tax-free, and that's why it's important to use the new rules of money to invest for passive income and create true wealth. Get our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. It's changing people's lives around, and it's going to change your life forever, okay? Starting with nothing takes effort in the new capitalism. Market crashes are no indication that investing is risky. The investor behind the investment is who is risky, or if it's a sophisticated investor, a master investor, then the investment risk goes down because it's a calculated risk, okay? So we have to manage risk as a master investor. But when the market crashes, it doesn't mean that we run away from investing. We actually take a look at the economy, at the world, and we spot new opportunities to acquire for free using OPM, the bank's money, tax-free, for passive income, to create more wealth for us and give us ultimate freedom, having options and the ability to manifest on demand, okay? The key to leverage is control, and the key to control is financial intelligence. The higher our financial intelligence, the more money we make without our money. Make money for nothing on our part. In the information age, knowledge is the ultimate leverage. The more passive income and capital gains we make without our own capital by using debt, the higher our return on investment will be, the higher our IRR, internal rate of return, is, and the higher financial IQ we will possess, and the more good debt we will control. Therefore, the game of money is won by acquiring assets using good debt. So we reach infinite return on investment fast, meaning it's money for nothing, and we're literally printing money legally every single day. I appreciate your time watching. Let me know if you have any questions. Go to our website if you need help with any of your business ideas, anything that you want to start. If you need marketing, if you need a brand, logo, if we need to mastermind whether your ideas or your passions can be monetized, then head over to our website, send us an email, info@masterinvestor.education. We have live consultations, meet with one of our coaches and experts on each and every single subject that we have regarding money, business, and investing to help you understand how to build the asset column successfully and create financial freedom and true wealth. Bringing you the good and bad news of money, the business principles that work in other economies. Stay great and wealthy, and I'll see you later. Bye for now.